Hello everybody, this will be a 3 strategies that is possible of trading the daily open. The daily open is pretty powerful, especially when it freshly prints just after a fresh daily candle. So feel free to like and subscribe. Plus I'll leave this video in a list of playlists called Advanced Trading. So feel free to check out those other videos along with this video. And let's hope it helps. So there are 3 different types of daily opens. I'm going to mention them throughout the video and just kind of how you can trade them and incorporate it into your trading. Of course, there is different variations of it. There's both short and long. And this first example, which is called the open drive, it is basically a long example. And so really what we're going to have is, let's say we have our daily open, fresh new daily open. Make sure you look up the times of when the daily open occurs. Just as a neutral bias, it is UTC times 0. So just convert your time zones and make note of when the daily open is, if it is possible that you can trade it. And so this is called the open drive, and this is when price or the daily open opens outside of the previous day value area. And so in this case, for a long example, you typically want to see a daily open kind of above the previous day value area high in this example. And so you'll see, I'll just kind of draw a price example. So you kind of see a volume or a price consolidation of price. And then once that new daily open occurs, you'll see a quick draw up along with an increase in buying volume if you're looking for a long, and increase in selling volume if you're looking for a short. It's very important that you make sure you have volume backed up behind this large move, as typically if you don't have volume, it represents a weak move. I'll go into examples of how to trade that, but typically you want to see a large amount of buying volume behind this. So you'll see price just kind of start to pump, and it will quickly pump along with volume. And so you guys can enter a trade based off on that pump, and it'll be typically a safe move based off of that. And so really going off of that, just an extra tip from what I picked up on is, if price moves up with low volume within the first 24 minutes to half an hour, give or take, typically it's the first 24 minutes. But if it's with low volume, typically, kind of opposite of what I explained earlier, it is typically a good sign that you can short it. And so if you have price move up with low amount of volume within the first 24 minutes of the daily open, and there's low volume, so if you turn on your volume chart and you just kind of see low amounts of bars volume, that is typically a good sign of support once that 24 minute hits, and then you can look for a short downward. Typically what you want to see is price making its way downward, and then you want to see a large amounts of volume happening in the opposite direction. So if price was pumping, and then you see it reverse coming down, and there's a large amount of selling volume, that is typically a good sign that price will start to reverse downwards. And so you guys can hop in the trade on that. And of course, that occurs within the first 24 minutes. So that is just something to kind of counter trade the open drive if you're not seeing that good amount of buying volume or selling volume within like the first daily open of the candle. Next is really the open test drive. So it's kind of similar to the open drive. However, this typically happens off of a retest of a level. It can be really any level. It can be a weekly level, a daily level. It just has to be relatively close to the daily open. And so typically what you're going to see is price just kind of consolidate within that daily open. It'll come down, and then it will bounce off of a local support level. And of course, when it is bouncing, you want to see good amount of volume backing up that move. What I mean is by a good amount of buying volume if you're looking at a support, and a good amount of selling volume if you're looking at a resistance. So these can really be counterintuitive if you're looking at both a long or a short. So again, you want to see resistance if you're looking for a short. So you'll see price come up and then reject off of, and then you'll see the large volume increase of sellers being interested in that level. So volume is very important when you're kind of looking to trade off of these daily opens and what. My apologies earlier. I got the open test drive along mixed up with the open rejection. And so this is really the open test drive. It is where we just get a retest of that daily open. It acts as a support or resistance based off of another zone of confluence. So let's say we get a rejection off of a daily, just kind of hover around for a little bit, consolidate, and then we do bounce off of that daily open, and then we do get a strong move of volume. Usually you want to see an injection of volume that you're looking to trade. So usually you want to see good buyers stepping in and buying the level to back up the price of the move, along with if you're rejecting off of that daily open, you want to see a good amount of sellers stepping in and being interested in shorting that move along with you. So again, volume is a very important key aspect to doing this. And typically this is really the three different strategies to trading the daily open. Again, some side notes to this is that daily open typically is also known as kind of the initial balance. And so if I go to ExoCharts, I'll kind of show you how you can look up initial balance. Initial balance is typically this kind of bluish line you see on an ExoCharts TPO chart. And so this represents the first 1 hour of trading within that fresh new daily candle open. And so if you see people talking about initial balance, that's just kind of what they mean. It's typically the first activity of buyers and sellers within the market and seeing the range at which it moves. So it can be very useful in incorporating it into your trading. And a second note of doing this strategy is that I don't recommend trading this strategy on when the weekly and daily are opening. So don't trade this during a weekly open, really, as this can get kind of messy. Typically, it is still kind of a weekend trade, so you won't see a strong amount of volume being backed up by these amount of moves. And so just another side note, be careful when trading this when you also have a weekly and a monthly or both happening at the same time. And so let's kind of review and go over everything that we went through with this video. So I'm just going to open up a notepad and just type some notes. I'll leave this in the description of the video as well. And so there are three types of daily opens. The very first one is the open drive, and this is where price opens outside of a value area. So it can be a previous day. I like to use the previous day candle value area. And so it can be a previous day value area low or value area high, depending if you're looking on a short or a long. And then with this, you want to see price continuing in a direction quickly with volume. So again, you want to make sure that as price is pumping or dumping, you want to see a good amount of volume backing up that move. So you typically want to see a lot of buying volume when you see price pumping. That way you can get into the move and just kind of have a safe bet. And then when price is dumping, you want to see a good amount of selling volume, or red volume in that case. Second type, this is probably the most talked about type of daily open, and this is the open test drive. This is when, again, when price goes and retests the daily open with a good amount of volume. So again, this is just where the daily open acts as a support or resistance, and then it kind of pumps or dumps based off of the volume. Again, you want to make sure you have a good amount of volume backing up this move, so pay attention to the volume again. And lastly, the third type is the open rejection reverse. And this is the open makes a weak directional move and tests a key level. That's why it's important to do your TA, in which price reverses. So again, if you see price just kind of consolidating with very low volume, and then you see it go retest a support or resistance, and then you see it reject or act as support with that local resistance or support with a good amount of volume, that is typically a good sign that price is going to move strongly in that direction based off of the volume. So then you can get a pretty good trade based off of what is happening. And so that is pretty much it for the daily open types and just kind of how to trade them. Again, make sure to like and subscribe. Plus, I'll leave this in a playlist called Advanced Trading, where I'll continue to make more videos based off of this in the future. And so thanks for watching. Bye.